Hi, and welcome back to Finally Revealed. In this episode, I want to fill in some gaps about the Payroll Protection Program loans. On April 3, the corporations, C Corps, S Corps, limited liability companies, and partnerships could submit their applications to your local bank for participation in this program. On April 10, 2020, the sole proprietors, whether you are doing business just yourself under your own name or if you have a DBA, and whether you are using your own social security number for your company, or if you are a sole proprietorship just using your name or a trade name, not a corporation, not an LLC, not a partnership, but you have a federal tax ID number or employer identification number, it applies to you. And it applies to those who work for other people as an independent contractor, whether you contract out for many other jobs, whether you whether you just have one main place that you work with, but you are paid by a 1099. So those are the two different categories. As of Friday, April 10, all of these people and all of these companies can apply. The applications will be accepted until June 30th, 2020, or until the $354 billion is distributed. They are up to about $50 billion as of now. I'm recording this on Wednesday evening, April 8. So that can give you an idea. There is a possibility they may throw some additional money into it, but please don't wait. Right now, the process is taking anywhere from 2 to 10 days. The SBA issued guidelines or directives to the bank within the last 24 hours and told them from the time of the approval notice, they are to pay you the money for the loans. Some banks have funds available at the bank to pay you. Others don't have enough, and so they have to wait for the money to be transferred. So that is part of the reason for delay. The SBA doesn't want them to receive the money and not give it to you, and that's the reason for the 10 days. And it was not 10 business days, it was 10 straight calendar days. When you submit your application, which is the form that's at home.treasury.gov, it's a 2-page application. I have a copy of it here. I'm going to go through some sections in it. You fill that out. More than 20%, the owners of more than 20% of the company must initial on the second page the different blanks. Those people have to be listed, or companies if it is a company that is a part owner, or a trust. Trusts on their own cannot apply. Estates on their own cannot apply. So it's just formal legal entities or individuals. So you're going to fill out the 2-page application, submit it to your bank. There is no fee to submit it. There are no fees at all in connection with the application. The only fees there might be would be if you had someone help you with the application, and that is a third party that is able to be charging you fees under the regular SBA guidelines. You really shouldn't have to pay somebody for that job because it's very simple. One of the biggest things that I am getting lots and lots of questions about is, really? Is this all there is? Yes. There's no underwriting. It does not matter about your credit. They're not going to pull your credit. They're not going to check on your assets. They're not going to check on the income and expense for the company. They're not going to check whether you're actually working right now, because most of us are not. They're not going to check on whether you have a skeleton staff, whether you're working from home. None of that matters. The number one thing is, was your business, you or as a 1099 person or sole proprietor or any of the other businesses, were you in business February 15, 2020? Whether your staff was already dwindling because of the economy, whether, whatever it was. If your business was in existence on that day, then you're eligible. The next thing is, was your business started in 2020? If so, and I'm talking about everyone here, whether you were on your own, doing things out of your house, whether you had a formal entity If you were in business on 2020 but not before, then you count January, February as far as receipts. So if you're a 1099 person, add up all your jobs, what you received as pay, gross pay for January, February. If you're a truck driver, if you're paid weekly, if you're paid by the haul, whatever, it doesn't matter what the calculation is, it's just the money. How much money did you receive in January? How much money did you receive in February? Add those two numbers together, divide by 2, that's your average for 2020. If you just started in business in 2020, that's your number. Then you're going to multiply that by 2.5. Then you're going to add in any emergency loans that you received after January 31, because those can be refinanced. That total is your amount that you can borrow, that you will get from your loan. The other thing is, if you had employees that you paid, not 1090, you can't count people that you paid for under independent contractor with 1099, only those that you did withholding for, and state and federal withholding. If their amount was not enough to have federal withholding, but there was state withholding, it still counts. So there you would be including their pay that you paid them. Okay, that was very confusing. When you are a sole proprietor or a 1099 person, you don't have usually other people that you pay. If you do, it's most likely coming out of what you received. So you're only going to count what you received. Average that together. If you're new in business, it's going to be what you received January and February 2020, calculated according to the calendar month, add it together, divide. It's going to be what you received in January, what you received in February, add it together, divide by 2. No. Add it together. What you received in January, what you received in February, add it together, divide by 2. That's your average. Multiply that by 2.5, and then add in any emergency loan you received from January 31st forward, or if you had a 7A SBA working capital loan, you can add that in and refinance it, and that would be your loan amount. If you were in business in 2019 or before, then you're going to take what you received for 2019, the whole year, average that, so you divide that by 12. What's that number? You can also look at from February to February, 2019 to 2020. What was that number? Divided by 12. One of those numbers, whichever one is more beneficial to you, whichever one's higher, use that. You can always also use January and February and average those, but most people, if they've been in business before, their number before is going to be higher. Tax returns are not due until July 15 of 2020, so you don't have 2019 tax returns to support this. You can use any tax documents that you receive, so your 1099 from 2019, if you're a sole proprietor or independent contractor, that can help support these numbers for the loan. 2018 tax returns can also be used. They're not auditing your tax returns. They're not doing anything other than looking at what you received if you were a sole proprietor or 1099 person. If you are applying for a company, they're going to look at what the wages, compensation, and payroll line is, what the company paid to the owners and to the employees. So an LLC, it's going to be distributions. Some corporations can also have distributions, so you'll include those. This is what is included as payroll for purposes of this loan application, okay? Salary, wages, or similar compensation. Cash, tips, or the equivalent. Vacation leave, parental leave, sick leave, family leave. Separation allowance if somebody had to be let go, or termination allowance or severance. That is included as payroll. Group health care benefits that the company paid and includes group health insurance premiums. That's really important because those are expensive. Any retirement benefits that the company paid either into 401ks or any other plans or SEP IRAs that the company paid. If it's your sole company, it's your LLC, and you put money away for retirement in that year, include that as part of your total number that you then average for the year. And also include state and local tax assessments on employee compensation. So that's your unemployment insurance premiums, that's your state and city and whatever local tax withholding that you have that applies to those wages. So those numbers are added in, and then you do your calculation and then multiply it by 2.5. And those items that you then pay out of the loan that you receive also still counts as payroll. That's really important because for forgiveness of the loan, in the 8 weeks after you receive the money, you have to spend at least 75% of the loan amount on these things. So money comes in, they want it to get out to people and go into those categories. The loan is also able to be used for mortgage insurance. The loan proceeds are also able to be used for rent for the business. So if it's in your house and you take part of your mortgage as your rent, or you have a rental deal, that is included. If you have a business that owns real estate and it has a mortgage on it, can pay the interest on that. That interest payment can be used. That interest payment can be paid with part of the proceeds of the loan, as well as straight rent, as well as utilities, which are water, gas, electricity, transportation, phone, and internet. Because the loan proceeds can be used for those other things besides payroll, don't get hung up on those items as far as the application, because those items don't count when computing the amount of the loan. The amount of the loan is based only on those items of payroll that I just read, okay? I know it can be confusing. This is a completely different system than we've ever had for this type of a loan. They wanted to make it very simple. So the mortgage, the rent, and the utilities are amounts that you can pay with the loan once you get it. But you only look at the payroll part. The receipts that you have as a 1099, the income that you have as a sole proprietor, or if it's a formal company, this list of payroll items that you can count, okay? And then that's how you're going to get the loan. Now remember, you get these numbers and you multiply it by 2.5, so you're going to get 2.5 times. So what they're basically looking at is you're going to get more than what your average was, and so it's with that more that you can use to pay some of these other items. Now you're going to be filing these with your local bank. Your local bank should have some type of information on their website, or call them about how they're accepting the applications. Some of them are taking them through the drive-through. Some of them you can drop off at the front door, since they're generally not open for everybody to come in. Maybe do it online, do it by fax, call them up, okay, and find out which is their way. The applications, they have to check your payroll figure, and they will come up with the loan amount. They should communicate that to you if it's different than what you thought, and you might have a discussion about that. If this is a bank that you deal with regularly and you anticipate that you have some other, and you anticipate or you know of some other expense you need to pay to save the business, tell them about this. That may help you be able to use some of the loan proceeds for that purpose, and it will help you when you get to the forgiveness part. There is some discretion by the bank. Now, the bank is going to ask for certain documentation to verify the income of the sole proprietor or the pay that was to the 1099 person. Everybody else, they're going to look for the payroll items I told you about. They're not examining it for any other purpose. The banks are not responsible for anything that you give to them. You are. So if you are lying, or then you get the loan based upon some real information, but you use the loan for something completely different, not to pay you yourself, or so if you use the money that you receive from this loan and don't pay payroll, which doesn't make any sense, especially if it's including yourself, if you don't pay payroll, you pay something completely separate, you can be prosecuted and the loan will not be forgiven. You have to pay it back over 10 years at not more than 4% interest. The interest on the initial disbursement is at 0.5%, 0.5%, and it is deferred for 6 months. So fill out the 2-page application, initial it where necessary, provide a copy of your 2018 tax return, your 2019 W-2s or 1099, one thing also that I have been asked repeatedly is, what if all of the people I pay in my business are 1099 people? Then you don't count that as payroll. Those people can file on their own for their own loan. You don't get to do it both ways. They're either an employee where you did withholding, or they're a independent contractor. And you don't get to count 1099 people as your employees, okay? So they don't count. Just you as the owner, if you're the only one, or maybe you have, multiple people that you use as independent contractors, but you only have you and another person as the employee, then it's only you and the other person as the employee whose wages are going to count with these other items for the payroll component. If everybody in your company is paid and there's with tax withholding and things, then all of those are included in the payroll part. I'm really not trying to make this more complicated, I'm trying to make it better. A couple of questions that I've had relate to when a company owns an interest in an LLC, or an individual is paid through a company. How do we take care of that? And these are situations where people have arranged it for their cash flow and for their tax liability purposes. The entity receiving the money and paying it out first is what you should use. It's a lot simpler. There is no requirement that you pay rent, utilities, or mortgage. This is all about payroll. Those are just other automatically permitted expenses. You will ask for forgiveness of the loan after you've spent the money, after you get the loan. So fill out the application, submit the information, do your calculations, and then be prepared to discuss it with the bank. The bank just checks your math or does their own math, and you talk about that. They submit it to the SBA. All they're submitting is the application, not any of the supporting documents. The SBA gives it a number and sends it back. The banks are not necessarily sending these in the priority order that the SBA and the government specified, which is underserved community businesses, veterans-owned businesses or businesses that serve veterans, women businesses, any other more disadvantaged classes of businesses are going to go first. But the banks are submitting these. The banks get a percentage of the loan as a fee. That's how they make their money. And so they're not getting any payment from you unless you pay the loan back if it's not forgiven, or they're going to get just the 0.5% interest on the loan amount that you're going to then pay back. So the bank submits it, the SBA gives them a number, the SBA reports back to the bank knows the amount of the loan has been approved, they're supposed to notify you, and within 10 days of that confirmation back to the SBA, you should have a check. Then you take that money, when that disbursement is made to you, you count, that's when you start counting for 8 weeks. Then you track everything you spend that money on for 8 weeks, make sure at least 75% of it or all of it is used for these payroll items. Then you apply back to the bank, you show them your support on what you used the money for. Then they make a recommendation to the IRS, then they make a recommendation to the SBA on what they're presuming to be the forgiven amount. The SBA has 15 days from that submission to go back to the bank. The bank has 60 days from your submission to them on what you want to be forgiven. They have 60 days to get back to you about what that number is going to be. When they submit the forgiveness amount to the SBA then pays them on that amount because they have dispersed the money. So you don't have to worry about any of that part. You just have to know about your forgiven amount. I need to back up 1 second and tell you when the bank notifies you that the loan's been made, you're going to have to sign a promissory note. That might be by fax, by email, or in person. So you will have to sign a promissory note for the full amount of the loan, and interest will start running from that time of disbursement. If all of it is forgiven, then you will have to sign a note on the 0.5% interest, which the original loan terms are for 2 years. If there is more than just the interest that is not forgiven, and that will be stretched out over 10 years at an interest rate not more than 4%. So I hope this helps you guys. Please apply. Please don't overthink it. Leave any more questions below. I've thought about maybe trying to do a live stream this week to answer any other questions. Let me know if that would be helpful. I'm really trying to get this out, and I don't know if I could do the live. I'd have to not use my, this is like a real camera here. I'd have to figure out how to do it on my laptop or something. But you know, I'm not a quitter. I could try. But let me know if there are any other questions. Please leave them below. Please don't not apply because you're worried or you're concerned or something. Please apply because this was done for your benefit, okay? Give me a thumbs up if this helped you. Leave any comments or questions below. Share this with somebody who's been asking a bunch of questions or trying to figure things out online. Subscribe to see the other videos. Look at the comments on my other videos on the PPP for other questions. And thanks so much for watching. I'll see you next time.